Despite a proven estimate of 206.53 trillion standard cubic feet of natural gas deposits in Nigeria as of June 2021, the price of liquefied petroleum gas (LPG), popularly known as cooking gas, has surged higher beyond the reach of Nigerians, with 5 increases recorded in 3 months. The price of LPG has continued to soar on the backdrop of rapid devaluation of the naira and other economic indices, despite the country sitting on a 206 trillion standard cubic feet of gas and the much trumpeted decade of gas policy of the current administration. For over 90 million Nigerians who live on less than $1 per day, cooking gas may have become luxury amidst the worsening unemployment situation, galloping inflation rate, and dire impact of COVID-19 pandemic, making the masses resorting to the use of firewoods, charcoal, and kerosene for cooking across the country, despite the health and environmental effects. I have joining me now via Zoom to look at this is an energy analyst, Mr. Charles Majomi, live from Abuja. Good afternoon, Mr. Majomi, and it's very good to see you.
Good afternoon. Nice to be here. Thank you.
Yes, I'm going to start with a layman's question. The last time I went to buy gas, a 12.5 kg, it was about 7,000 naira. A week before, it was about 5,500 naira. Please, what could be responsible for this hike?
Well, you're absolutely right. And I commend your opening remarks, because I think you hit on all the crucial elements of why we have increased our gas supply substantially. As recently as July, LPG price was about 360 naira per kilogram. Now, buyers can expect to pay as much as 480 naira per kilogram as recently as August. I think fundamentally, we have to understand where we have gone wrong and why it is that Nigeria, despite being the second largest producer of LPG on the continent, has the lowest per capita consumption of LPG, certainly in Africa, perhaps among the very least in the world. It's because really our strategy has been export focused. In exporting LPG, to other markets, we have underserved our own population. That's the fundamental framework that has allowed a lot of these dysfunctionalities to occur. So when you look at the fact that we have to import LPG and understand that as recently as 2019, I believe, the tax, the VAT that had been paid on LPG export, that had been taken off at 5% by this administration in order to accommodate greater importation at less cost of LPG into the country, has been reinstated at 7.5%. So this in itself is a cost that has to be passed on to the consumer. So that's number one. The second element that is creating this problem is the devaluation of the naira. You know, LPG and all these commodities, as well as the naira, these are all dollar denominated. And the naira is pegged to the dollar. So as naira devalues, increases. This is part of the kind of inflationary aspect of devaluing a currency. That's another one. So I believe that all of these elements together have really created upward pressure on LPG, and unfortunately, as is the case with other commodities, it's the consumer that's going to bear the brunt. I think the other element has been the perennial one of cylinders. How are we going to mature a market where we have this issue of extremely expensive cylinders, and those that are in the market currently are not well maintained? And that has always been a big issue as well. So we have really the coming together of many different elements primarily as a result of what I consider to be the wrong focus as far as LPG goes. The other item is that even if you were to be producing LPG domestically in Nigeria today, government has seen fit to impose duties on the component elements that would make up your manufacturing plants. This is a disincentive to local production of LPG. And so that needs to be removed if we are, again, to have a cost-competitive LPG market that's in the manner that they deserve to be served in.
Great stuff. That breakdown was really very, very detailed. Now let's look at this 250 billion expansion fund, natural gas expansion program being initiated by the Central Bank of Nigeria. How well do you think this can unlock the potentials of our gas reserves? Don't forget, according to the Ministry of Petroleum Resources, it's a decade of gas.
It certainly is the decade of gas because it has to be the decade of gas. And I think, first of all, we have to come to a very firm realization that the era of crude oil has come to an end. Gas is the transition fuel that we will need to unlock value addition in our economy, diversify our economy, bring people out of poverty, and look to the future towards renewable energies that are even cleaner than gas. The issue of the $250 billion central bank CBN fund, I think, has to be very, very carefully treated if we're not going to have disaster, really. My sense is that you have to look at the key areas of dysfunctionality and try and use this fund to correct it. For me, that would be the element of the differential between a falling naira and the dollar. If you're building LPG facilities in Nigeria, and I think that this fund is really targeted at developing that kind of midstream capacity, then the key element when you're buying your elements or the components of your manufacturing plant in dollars for what will be naira offtake, then the differential between a falling naira currency and the dollar, okay, needs to be stabilized. There needs to be some kind of equalization mechanism. In my view, that fund should actually target that kind of stabilization in order to give investors the kind of confidence they will need in coming into an economy where the currency is experiencing some considerable headwinds. I think that's one. I think the second one is bona fide LPG projects that are there to increase domestic utilization capacity. You know, if we don't increase domestic utilization capacity and we keep exporting our LPG for hard currency, which is fair enough if you're a business developer, we are going to run into multiple issues like that you alluded to in your opening remarks. Number one is deforestation. Deforestation comes from gathering of firewood, and it comes from the increased space in gathering that firewood as populations in the rural areas of this country increase. This is bad for our environment. This has to stop. The second thing is female mortality. Okay, do you know that Nigeria has, I think, among, if not the highest, female mortality profile from women cooking and inhaling the toxic fumes from kerosene, which is a much dirtier means of cooking. So we have to address the issue of domestic supply into the LPG market. This intervention fund, therefore, should target the equalization mechanism that will allow for a closing of this differential between naira and dollar exchange, as well as targeting projects, in my view, midstream LPG projects that are bona fide with proper qualified investors, where governments can take some kind of an equity stake and benefit while growing the market through increasing supply of domestic LPG into the market. So I think definitely it has to be very carefully monitored. I think it has to be done transparently. Nigerians should know what's going on with this fund. It should publish regularly how it's disbursing the money. It should also be a little bit more clear on the conditions for accessing the fund if you're a domestic LPG producer. But again, let me say that in order to stimulate the LPG development in Nigeria, there are a few other things that I think the CBN can do, which is remove the taxation on imported factory components for the production of LPG. Remove the VAT, which is at 7.5% for importation of LPG into the market. I think with these things, the fund can then operate in a way that's functional and that can benefit Nigerians.
With the exclusion of import associated costs and, of course, economics of scale, what do you think will catalyze competition in this space and could crash the price of LPG? Do you see this happening anytime soon? Any crash?
I think first of all, we have to look at it from a deregulated market perspective. I mean, competition is healthy. Global competition is certainly there. Incidentally, the price of LPG has moved from $260 per ton on the international market to $650 per ton on the international market. So market forces are certainly in play, and I think they should be unbridled. I think you need to deregulate in my view, deregulate the sector, let marketers and market forces compete to bring the price down locally. And I think industry and free market economics will play its hand and look at what's happening in other neighboring countries, in Cameroon and all these other places where LPG is used freely, and they don't seem to experience the same kind of problems we have. Certainly, developing plant capacities on large economic scale will definitely play a role. But I think it's right.
All right, Mr. Charles, if you can hear me, let's now look at Nigeria pledging to end burning of gas by by 2030. Yes, I read that too in my intro. Now, what do you think? Do you think this is visible, and how can this happen? Talking about stopping gas flaring.
Do I think that ending gas flaring is feasible by 2030?
Exactly.
Is that what you said?
Exactly.
I didn't catch it.
Yes.
Okay.
Yes.
Yes, I think it's entirely feasible to end gas flaring by 2030. What we have actually the DPR had been driving the Nigerian gas flare commercialization program along with the Ministry of Petroleum Resources. It is my understanding that the first round of bidding has taken place successfully, or with some limited success, and some gas flares are going to be handed over to companies to utilize and to develop such things as LPG, gas to power, gas to other industries. It is doable, but I think you also have to look at it very critically. The nature of Nigerian gas flares is such that you have many disparate flares in the Niger Delta that on their own individual merits might not be commercially viable. I think government has to look at, and that's not all the flares. I think the ones that have gone now in this first round of flaring, of bidding, are the ones that were rich and had sufficient volumes for mid and small players to come in and monetize those gas resources. The other smaller disparate flares that exist throughout the Niger Delta, the swampy areas that might not be very accessible to investors, have to be dealt with, because in aggregate, they amount to a large number of gas flares. I think the greater clarity around fiscal issues concerning gas, as expressed in the PIA, will give greater focus to the development of gas assets regardless. But if you're looking at the gas flares, I think there's something missing, which is there has to be some kind of methodology implemented for aggregating the smaller gas flares such that they reach commercial volumes that can then be developed and monetized by players. The question then is, who is going to do that? And this speaks to the perennial argument of whether government should invest in that kind of infrastructure or whether the private sector should do that. But when you're talking about wholesale aggregation of gas and pulling that gas together, my sense is that either we develop that as a line item, business line item, and develop sufficient RF requests for proposals on that basis, or government intervenes, aggregates this gas, and then sells it on to utilizers. I think that's one big thing. The second thing is, I think, host communities. There has to be a measure of alignment between the activities that are going on to monetize these gas flares and the interests of the host communities where these gas flares are located, in order to mitigate the potential for conflicts arising from not dealing directly with the grievances that have been building up over generations that came from those gas flares. So that's another issue, and this relates to the onshore aspect. I think the third one is to mature the markets. There has to be a notion of where the markets are in Nigeria and infrastructure to be able to take the gas that is being harnessed into the infrastructure, whether it's LPG, whether it's gas that's being sent to power. So you strip the rich elements, you send the dry elements to power generating units. Who is going to take care of that last mile bit of infrastructure? Are the people who are in the business of processing the gas, are they also to be people that build infrastructure? I don't think so. I think you segment the value chain and we determine who is going to be responsible for that infrastructure being built. And I think with that, with a utilization strategy, with a gas gathering strategy, with good fiscals, with a good governance strategy, keep in mind now that there's going to be two regulators, the midstream and downstream, which will deal with gas flare, and the upstream, which will deal with gas supply. With all of these things in place and properly implemented, I think 2030 is a very doable time horizon for cessation of gas flares. And we must do it because we are moving away from crude oil production. And remember that associated gas, that is the gas that is associated with crude oil production, is the gas that we are currently flaring. So in the long term, as our associated gas production profile goes down, we need to move away to non-associated gas. But in the meantime, we need to be able to do something to harness that gas and do it quickly.
All right, there. Thank you very much. Energy analyst there, Mr. Charles Majomi. Thank you for spending your time with us. We appreciate this.
You're welcome. Thank you very much.